Very much for that, Seja Patel. Well, another big story we're following, we have oil prices. They are trading near record levels. U.S. crude is creeping close to $100 a barrel. Again, take a look at that chart, $99.93 to be exact. For more analysis, we're joined now by Jonathan Cornevelt, Director, Asia Hudson Capital Energy, LLC. Jonathan, good to have you with us. How real is that $100 barrel market? How sustainable is it for oil to trade above that? And are we going to see that for the rest of 2008?
Well, Christine, we're bullish. We were very bullish when crude was trading in the high 80s, and I think that tells you right there how much of a benchmark it is. We continue to be bullish as it approaches 100 and passes 100. You have the usual suspects, same tensions in the Middle East, problems in Nigeria, and the weakening dollar. But you have to counterbalance that with the problems you're seeing with the U.S. economy and the global economy actually slowing down.
How high do you see prices heading from here?
Well, I see a range, actually. I see us going up to at least 110, maybe even hitting 115. But I also see us throughout the course of the year going back down to maybe 85. But I see a range between 92 and 102 is where we're going to sit.
Jonathan, Brian Shackman here in the U.S. Take out the geopolitical element because it's so unpredictable, right? And we have this demand issue, the dollar issue. Which of those two are contributing to this the most?
Oh, I really think it's the demand issue. The dollar issue really that's part of the fundamentals, and that just causes a vicious circle that you get these speculators that kind of feed off of that. But it's really a combination of the both, but I really think it's more of the demand issue.
Jonathan, it's Anna Martin here in London. Geopolitics does still play, of course, a role in influencing prices, and we sometimes seem to see some curious reactions to geopolitical events. Some events you think are going to have an impact on oil don't, and some vice versa. Where do you think we stand with regards to geopolitics? Which events are the markets really watching?
Well, if anything, I think you're seeing a calmer geopolitical market in the short term right now, despite what you see going on in Pakistan, which is a terrible situation that really shouldn't have as much of an effect as maybe it is. You also see the Turkey going into northern Iraq and bombing the Kurds. That also shouldn't be having as much of an effect. I think what you're seeing is speculators just looking for reasons to get the market to go higher.
Jonathan, Brian Shackman once again. As we all know, we are in an election year for the presidency here in the U.S. If we go into a slowdown or a recession, these prices keep going up. How active is the White House going to get involved in this particular issue?
I think there's a very limited number of things that they can do. Of course, they would love to see the price of oil lower. They would have loved to have seen it lower when it was trading $80 and $70. So I think there's a lot of rhetoric that goes around, but I really don't see too much that they can do.
You know, Jonathan, we keep talking about demand destruction. You mentioned oil at 110, 115. Is that the point where we would see demand destruction taking place?
I really don't think so. I think you have to get closer to maybe 130, 135 to start seeing that. We all know that 100 is really just a psychological number. So 110 is only $10 higher. Of course, it adds a little bit more pressure, but not enough, I think, to really cause a difference.
What about China? I mean, there's a lot of talk about demand from China helping to, make up for the slack coming from elsewhere in the world. Where do you see demand when it comes to oil exports, that China's exporting to the country?
China exporting? Well, I think there is an enormous amount of demand coming from China. One interesting statistic is that 1 out of every 30 people in China owns a car right now, and 1 out of every 2 people in the U.S. owns a car. So when you start to see that number getting smaller, 1 out of every 28, 1 out of every 25, that is an enormous growth in the number of automobiles on the road. It's an enormous growth in the amount of steel that's needed for those cars, enormous growth in the amount of oil and gasoline that's needed to power those cars. So I think the demand growth out of China is going to be enormous for some time to come.
Okay, we will continue to watch that picture. John, good to talk to you. Thank you very much for coming in.
Thank you. It was a pleasure.
It's been a pleasure. Jonathan Cornevelt, Director, Asia Hudson Capital Energy, LLC.
Well, coming up on Worldwide Exchange, the dollar edging off yesterday's lows against the euro and the yen, but sinking U.S. stocks.